Today is Monday, April 3rd, and the markets are slightly down this morning. I think like 0.2% roundabout. Let's see. For SPY, the pre-market is down 0.1%. QQQ pre-market is down by 0.69%, so it's down the most so far. And then IWM, the Russell 2000, is currently actually up 0.3% at the moment. So the reason why you're seeing a pullback for the Qs is because interest rates are slightly going up this morning, with the 10-year currently at 3.94, which is at yesterday's close. It was up in the morning. And then for the 2-year, let's see, 2-year yield is currently 4.1, I believe. Let me see. Yeah, 4.1 up 0.38. So yield slightly up today, which will weigh negatively on tech stocks. And the reason why yields are up today is because oil is up almost 6% after a surprise production cut from OPEC Plus. So a bunch of countries in OPEC decided to cut production, which ended up raising the price of oil temporarily unless we get a recession, which is reigniting inflation fears, which means that rates have to continue to go up. So if oil holds this, $80 level that it's at right now, up from 75 at close on Friday, it's going to respark the inflation fears. Rates are going to have to go up, which will weigh negatively mostly on QQQ, which is why QQQ is down 0.75% today, down to 318 currently. Good morning, Irfan. Happy Monday. All right, yeah, QQQ is definitely feeling it the worst. So that's probably your best short position if you're going to take one this morning, I would think. But it is already down by 0.75. So the news has already been felt in the Qs. But IWM is managing to stay positive, up 0.5% so far. So we have a very mixed market with small caps leading the way. The mega cap companies, the big tech stocks, leading the downside, and then SPY is just about break even, at down 0.05%. So overall, pretty indecisive day. But let's check out the price levels I've got for SPY. Today I'm looking at 410 for the upside, 406 for the downside, and then 404.35 if things get really bad by the end of the day. I don't think that we have any major economic data to go off of. This morning we had the OPEC meeting, obviously. We have manufacturing PMI coming in at 945. And then the ISM manufacturing PMI also coming out at 10 a.m. So these are probably just going to be in line with one another. Going to have the same reaction to both of them, I would assume. But you got about 13 minutes until the manufacturing PMI, and then the ISM manufacturing PMI will be in 28 minutes. And overall this week, let's see, Tuesday, we have the JOLTS job openings. That'll be a pretty big report. You got some Fed speakers talking at 1:30 tomorrow. ADP non-farm employment change, that one's a pretty big report. Non-manufacturing PMI and I think services PMI is coming out on Wednesday. Those are two big reports. Thursday, initial jobless claims. That doesn't have as much impact as it was having before, just because it is a weekly report. So unless it's just significantly above or below expectations. And then you have non-farm payrolls coming out on Friday, but it is Good Friday, so the markets won't be open this Friday. Good morning, Nice Fishman. Good morning, Donald. I'm getting really close to that 410 mark. Let's see. If QQQ can manage to recover this morning, then I think we could see 310 and above this morning. But QQQ has a decent way to recover. It's at 319.40 right now versus a high in the after hours on Friday of 321. So about $2 it needs to climb in order to reach that mark. The Dow is only up 0.3%. This one looks like it's pulling back. Look like we have some topping candles in this first 5 minutes, possibly. We'll give it a couple more minutes, see how that plays out. Thinking about trading QQQ above 320 if we get a reversal. But I'll check the other indexes and see how they're doing first. Looks like SPY is still green on this candle. 4950. So yeah, hitting that 410 mark. Definitely could be in the cards today. It's above 50 on the RSI, so looking bullish to start the morning. What does this say? Well, I had something up here, but I guess it disappeared. Okay. These are going for 60 cents a piece already, so they're expensive. That's an expensive buy. 55 and 57 cents at the ask for that 410 call debit spread. QQQ, on the other hand, you might get that one a bit cheaper today. Let's see. QQQ. If you go with the 320 strike price for the short and the 319, well, it's actually the same price at 55, so not really much of a discount that you're getting for that, surprisingly. I would have expected some discount since QQQ seems more likely to come down, but that's not the case today. And then if we go with 320, 321, you're paying 40 cents to assume that it'll go to 321. Seems like a bit of a stretch, but it could be the case today. And yeah, IWM is just continuing to lead, up 0.6% so far this morning. Maybe we can fade the leader and do a call credit spread on IWM. And then maybe a call debit spread for QQQ. You're coming up on 180 for IWM. Let's draw up some price levels here. Clear. All right. So 180 should be like a psychological resistance, just because of round numbers. We'll extend this one to the left. Show the price. All right. Above that, let's see. There's a gap up or a gap down right here that we might need to fill soon with a low for this candle at 181.28. All right. So there's your two resistance that I would be watching for today. From the daily chart. And then for supports, you might look at this right here. This little gap down. That was a really bad gap down back in June of 2022. The low of this was 177.65. And then there's another gap in the chart just from Friday to today, where we ended up closing at, let's see, 178.41. So those are your support and resistance that I'd be watching for IWM this morning. 178.41 supports, 177.65 supports, 180 resistance, and 181.21 resistance for today. Let's see if we can short the 181 if we get paid a good credit for it. Selling the 181, buying the 182, you only get paid 9 cents. And then selling the 180, buying the 181, you get paid 24 cents. It's kind of a low credit, but the odds would be more in your favor than not, with IWM leading the way. So if the rest of the market pulls back, that would probably pull IWM back with it. Right now it's at 80 on the RSI, so you would be betting against direction. Hence why you're getting 25 cents in credit. I wonder if we go one strike price lower, how much we'll get paid. So we could short the 179, buy the 180, and you get paid 45 cents credit. So you get almost double the credit for that. But obviously you would need IWM to pull back below 179 in order for that to realize its max profit. Let's see. The bid is at 46. Let's see. I'll probably just put down my usual risk that I take on, about 400 lately. Yeah, and it's dropping really quick actually. I don't want to chase it down, so I'll put in the order for 44 for $350 credit. And post that to the premium Discord, send the alert through. Nope, wrong one. There we go. New options alerts. This will be a day trade. Premium members. Just opened a new 179, 180 IWM call credit spread expiring today, which is the 3rd of April. And I got them at 44, I think. Let's see. 352 over 8, 44 each, yeah. get a screenshot of the strike prices right quick. Let's see. Robinhood. There we go. Yeah, looks like QQQ is managing back down 0.5%, currently at 319.25. SPY still managing to be positive, but pulling back from that 410 level. And IWM right at that 179 mark. We got the PMI report coming out in 1 minute, so we'll see if that ends up creating some volatility here. Probably should. Manufacturing PMI came in at 49.2 versus 49.3, so a slight miss for manufacturing PMI. So not really much off the mark, I guess. So probably not going to have too much impact on the market direction. This headline is saying that major indices are higher after PCE came in below estimates, which has raised hope for slowing inflation, and that should probably be wiped away with oil up 6% this morning, in my guess. All right, these are going for 48 now. I opened them at 44. We'll be watching that 410 mark, seeing if we go above that, and that might be our close indicator for these spreads. If we do a call debit spread for SPY, choosing the 410 strike price for the long, we're paying 48 cents for that. And it just hit 410 right now. 410.07. Usually these would be priced a little bit lower, like 40 to 45. But since it's first thing in the morning, they're a little bit pricier than they would be later in the day. All right, let's check in on that IWM spread. With SPY at 410 now. Looks like we might need to close it early. They're at 50 cents a pop. I open them at 44. So we'll see if we hang above this 410 level first. Don't want to exit too premature. QQQ is gaining some ground now. Yeah, I think that's going to be the one I want to go long on if this does turn around. All right, and I would go with the 320, 321 strike prices. 45 cents for them. Kind of expensive, considering it needs to go up another dollar, but let's see. Probably just do 8 of these. Similar to the IWM, 8 and 8. So they should balance out. Roughly. All right. We're in for that. Now let's watch how this plays out. New options alert. Premium just opened a new 320, 321. Called up a spread for QQQ at 45 each. Oops, each. Expiring today. All right, and this will be a day trade too. And the strike prices were 320, 321. Why not naked options? Well, if I wanted to do it like a 321 break even, it would just be too expensive. Let's see. Like if I just did a regular call option, assuming QQQ to 321. Well, I guess I would be buying the same 320 strike price. So it wouldn't really make much of a difference. Good morning, Steph. Any other videos explaining options? Yeah, plenty of them on the channel. Yeah, QQQ is an index. It's top 100 stocks within the NASDAQ, so it's mostly tech focused. Looks like IWM is slipping now. But SPY is holding 410. Apple is leaning up. Let's see. AAPL. Yeah, Apple's at 166, so that could be leading the upside for the Qs this morning. Let's see what else. Microsoft is still down 0.23%. Tesla is actually leading the downside. Interesting. They ended up breaking the 200 mark that they were able to recover on Friday. So they just had the delivery report coming out. Let's see, another record quarter. I think it came in at 422,000 vehicles delivered, up from 405,000. So I guess the Tesla investors do not like the delivery report. I guess, let's see, 405 and 422. It's like a 5% increase quarter over quarter, so it didn't live up to the 50% year over year expectations. So that's probably why you're seeing a pullback for the Tesla. I've already got UVXY shares. I don't buy UVXY calls though. If you're gonna buy UVXY calls or VIX calls, I would just do regular VIX instead, just because you don't have to double the time decay. Over time, UVXY is going to lose its value because it's already leveraged as is. But let's see. So I'm down for both the options right now. But we'll see how the markets manage today. Looks like QQQ might have found a resistance at 320 with Tesla coming back down. That might be what's weighing out on it the most. Let's check the other big names. Nvidia is pulling back from its highs at 278. And then the Russell kind of just hanging in there at the highs for this morning. All right, the IWM trade is doing a little bit better now. Just going to wait till we pick a direction and get out of one of these. We got the ISM the ISM PMI report coming out in 5 minutes, so that might be our direction decider for this morning. Yeah, I'm definitely feeling more bearish than I am bullish today, just because markets were up on Friday based on lower inflation, and with oil going up this morning, that kind of destroys that particular narrative. But we'll wait on the data to come out first. Do I think SPY is gonna go down to 407 today? Let's see. It's trading at 410 right now, so it'd have to drop 0.75%. 407 might not be in reach, but 408 could be reasonable. With the VIX as low as it is at 19 right now, it's just hard to get any decent sell-off for SPY currently. If the VIX drops, does that mean volatility is going up or down? So if the VIX drops, that generally means that volatility is going down. But the VIX is a measure of volatility judged by how many calls and put options are being bought for the next 30 days until expiration. So it's not like an exact measure of how volatility is, but it's kind of a indicator more so of where volatility is. Just because whenever things are more volatile, people will be buying more put options generally, which increases the price of the VIX. That's why you saw the VIX going up to like 30 a couple weeks ago whenever the banks were failing, because people were getting really bearish, and then that ended up just kind of trailing off back to where it was before, because now the banks aren't people aren't too worried about the banks because we haven't had another failure in the last week or two. All right. Looks like we could be meeting in the middle with IWM and QQQ. QQQ is still down 0.5% or 0.6% almost. But this report's going to come out in 2 more minutes. These are going for 29 cents piece. So down 112. And then for the IWM, these are up by 25, 24. So I should be able to gain some of the losses from the QQQ trade back. All right, got about 30 seconds till this report is out. Now SPY's pulling back to 410.10, so it might be losing that 410 support. All right. Economic calendar. So ISM manufacturing PMI came in at 46.3 versus 47.5 expected. So decent miss for manufacturing PMI. And manufacturing prices are also coming down, 49.2 versus 51.2 expected. So prices and the purchasing managers index are both coming down for the ISM. But yeah, this is starting to look more bearish than it is bullish right now. Let's see, the 10-year is back down, so I think that would lead QQQ to go up, but that's not our case today. So far, at least. But that's a good drop for the 10-year. After that ISM manufacturing report. So QQQ should manage some upside. IWM might just be flat. I don't know. It's already up 0.5%, so it's the leader for today. So I guess I'll just keep both open for now. Watch the QQQ more closely. QQQ seems less likely to work out. Just because the strike price is further away than I need it for IWM. So I've got 8 of these that I opened for 45. Now they're going for 35. SPY is going up. What's the key support level for Qs? 318.74. That's what I got. This isn't really relevant anymore, so let me get rid of that. 318.74. You're looking at this little gap down right here. 319.90 is going to be a resistance, and then 321.44. Actually, sorry. Close at 320.89 is going to be another resistance where we closed on Friday. Is trading my full-time job? Yeah, that and the YouTube channel. It's what I do for a living. I'm really surprised that the 10-year is coming back with oil up 7% almost today. That's really shocking. Let's see the short-term yields. 2-year yield is 4.007. So it's still holding on to the 4 level. But it is pulling back 5 basis points, almost 6 basis points. Good morning, Jason. Glad you like the channel. All right. Yeah, looks like QQQ is recovering. And then the SPY is almost at 411, so that's probably going to lead the Qs up with it. But IWM really isn't feeling the love yet. Kind of strange. Tesla manufactured 4,000 Model Ys in 1 week. UBS is prepping for massive layoffs. McDonald's shutting down some of their U.S. offices. That was kind of surprising to see. McDonald's shutting down offices. I think Walmart was laying off people. So even your staples and fast food, things that typically do well in a recession, even they're kind of pulling back. Yeah, no problem. Glad to be here. How much ROI capital increase in fiscal year 2022? I think I used about $10,000 to trade options and I made $6,000 in profit, so about a 60% ROI. And then I'm looking to increase the capital to hopefully 20,000 by the end of this year. Oh, sorry about that. Taking on more risk per trade. That way I can get a little more out of my gains. Zero DTE call for Qs. Got it for 132. Not bad, not bad. Alright, QQQ looks to be losing its lead, so we might be going dead to the downside. Watch that 318.74 mark. Hopefully we can get out of the smaller loss. And then hold that IWM trade. Just doesn't seem to be as much confidence in IWM buyers this morning as there was early in the morning. So pullback seems likely here. All right. Open these at 45. They're going for 30. So that'll be a 120 for the loss. I'll see if I can get out a little bit higher though. Like 32 maybe. All right, I'll place the order for 32. It's getting close to 50 on the RSI, so it's going to be a pretty pivotal point. If we go below 50, then it'll start to sell off more. Did not get filled at 32 though. There, we should be filled now. No. All right, there we go. Discord. closing options alert. Premium. Just cut losses for the QQQ. Call debit spread expiring 4-3 at 32 each. Strike prices were 320, 321. And I had opened 8 for 45. Opened 8 at 45, so 360 minus 256 for a 104 loss. And then we still got the IWM trade to capture the downside if it keeps moving. Apple ripped me a new one. Wasn't trading Apple, but let's see. Yeah, Apple is the one that's starting to move down, but that 166 level. If this pulls back, that's probably going to lead the rest of the Qs down. That's not just Apple. It's Microsoft, Tesla. All of them, which is why you're seeing, I mean, Apple's up 0.3% and QQQ is down 0.5%, so you can't really say Apple is the only mover here. UNH calls, let's see. United Health Group, yeah. Up 4% today. Jeez, that's a pretty big move. There's a lot of volume coming in on it too. A lot more than the last couple of days at least. Let's see. Trading higher amid Medicare finalizing. Oh, so that's your news this morning is Medicare finalizing pay rates for 2024. So that's why it's up a good 4% today. Don't have any earnings trades for this week, unfortunately. There wasn't anything interesting. What is Micron up to? Micron's down to 59. So they have the news of China cracking down on their chips in fear of cybersecurity risks. So Micron is managing down 2.6% today, while Nvidia is only down 0.4. Do I touch the banking sector? I wouldn't want to touch the banking sector right now. I think that it's a very risky place, unless you're doing like a long expiration date. Let's see. And I would pick like a single stock rather than a ETF like XLF or KRE. Let's see. Yeah, XLF still down from the past month after the bank failures from 36. But if you're looking at like Bank of America, this one could probably stay below 30 for a while, as long as this fear of, a bank meltdown continues. My problem with the banks and why I would be bearish on them continuously would be the rising interest rates. Housing inflation still pretty high, means that there's going to be less home loans, which is going to bring down their top line, their revenue, which inevitably impacts their bottom line, their earnings. So I think that banks are in for a pretty tough next couple of years, as long as the Fed keeps these interest rates so high and inflation is still sticky in housing. Why don't I adjust? I had a bearish and a bullish position, so that's how I manage, I hedge my risks with IWM and QQQ. Taking one bullish, one bearish. Do I think that Schwab is adjusted for future earnings? I think they could be adjusted for future earnings based on the recent drop. But that was due to the whole banking mess. So it's kind of a different narrative why the banks ended up coming down than what I would have expected. Schwab, for some reason, was really getting hit too. It was down from 75 all the way down to 52. So Schwab was like one of the worst hit of the big banks. Like Bank of America started at 34, now it's only at 29. So Schwab, for some reason, there seems to be a lot more risk in them versus the other big banks. Not too sure why though, because with Schwab, given that they're a broker, well, I guess they do have like money market accounts and like bank accounts too. So, but Schwab also has the brokerage with them too, and with the brokerage, you're insured up to 500,000 and 250,000 with SIPC and then FDIC insurance. So I wouldn't be too worried about keeping my money with Schwab. Most of the revenue is from free cash. I don't know if people want to be putting their money into high yield savings when you can get more out of the bond yields right now, though. Like if you're looking at the 2 year, it's trading at 4. In the best yield you're going to get for a high yield savings is roughly around the same. I know that the markets account, my markets account, is paying me $375. So I could get more if I'm putting my money into treasuries, especially on the shorter end of the yield curve. Like the 3-month treasury yield is 4.91. So I'm getting another 1% interest per year if I'm putting my money into 3-month treasuries, or if I'm putting it into 6-month treasury, I'm getting, 4.9, right? So I'm getting much more out of these short-term treasury bonds than I can get out of a high-yield savings. So people that actually have, a lot of money to be putting into treasury bonds versus the money market funds or high-yield savings account, they're going to be putting their money into treasuries instead, just because it's going to pay them an extra 1%. Like if you're doing $1 million times 0.01, you're getting an extra $10,000 a year. So it makes more sense to be putting your money into treasury bonds if you have a lot more capital. Yeah, retail investors would definitely be putting their money into just regular high yield savings. But the money managers, the people that have millions of dollars, they're going to be putting their money into the treasuries. And that's why you saw the treasuries pulling back the last month, is because people were too worried to keep their money in their savings account with the FDIC limit at 250. So people were transferring all of that money, that excess of over 250, into treasuries instead, because treasuries are the safe bet. That's if the U.S. doesn't default on its debt, but we haven't yet, so we'll see. Surprisingly, the VIX is up 3.5%. SPY is up 0.3%. That's unusual whenever both of these are up. Convergence usually leads to some more downside, but that was also the case a few days ago, but we didn't see any drop for it. So We'll see how it plays out. Gold is up to 185. That's your recession hedge right there, is gold. If anything. Kind of upset that I got out of my gold leaps that I had. Probably could have held it for a lot longer, but I think I snagged it at like 176 and sold it at 180. Yeah, no problem. Do I have any high yield savings bonds ETFs for long term? No, I do not. Doesn't make sense for me to put my money into bonds if they're only paying 4 or 5%. Like if I'm getting 4 or 5% on my $50,000 portfolio, even if I put in my entire portfolio into bonds, I would only get paid, let's see, $2,500 for a year, like $200 a month. Not worth it to me. Dollar index and the 10-year are both coming down, so that's more recessionary. And then oil is up. It's kind of conflicting. Whenever oil is going up, that's not recessionary, but that was also due to OPEC cutting supply, so kind of manipulated a bit. Looks like IWM is headed higher now. 179.70 almost. And SPY's at that 411 mark again. So we'll see if this pulls back again. If this will be a double top or not. Oh, I guess that actually cracked the high. But yeah, sentiment definitely bullish for RSI at 76. Yeah, definitely looking bullish for RSI. Month over month construction spending was down 0.1% versus down 0.1% expected. And then, yeah, the manufacturing prices were dropping. Manufacturing employment was down too. 46.9 versus 50 expected. So definitely seeing a slowdown in manufacturing. So that's why you got the 10-year pulling back to 3.4 from 3.5 this morning. If manufacturing is slowing down, that's recessionary. But it's also inflationary at the same time if demand sticks around. Looks like QQQ managed up to 320 now. So bounce at about 50 RSI. Triple bottom on that too. Yep, 320 for Qs. We'll see if Tesla ended up recovering with that a little bit. 196 to 198 almost. Could take a 200 call debit spread again. But that's definitely not looking pretty this morning for Tesla after their delivery report. I wish they had more strike prices to choose from. Like getting back to 199 would be a lot easier than that 200 psychological level. But yeah, SPY is definitely pushing the highs. Almost getting to 412. Up 0.5% already this morning. SPY. These are probably going to be expensive too. All the calls are super expensive. Yeah, 48 cents. Actually, that's not as bad as I would have thought. I would have thought that would have been going for like 55. And then IWM is just kind of hanging around 179.5. Yes, I do this full time. I do. The Dow is actually leading the way this morning, up 1%. That's interesting. So even after, what was it, McDonald's shutting down their offices and then Walmart laying off employees, both of those are up. Not really too surprising, actually. I guess every time you get layoff news, stocks usually go up. But Walmart's up 1%. McDonald's up 0.7. So those are the leaders so far this morning. Bad news is good news in this market. Markets will love any layoffs that they get lately. Do I think we're in a bull trap? Probably a bear market rally. So yeah, basically a bull trap. And then I would probably want to short the range, assuming that we're going to stay below like 418 or maybe a high of like 430 would be my guess. 418 is going to be an important level. It's a Fibonacci from the COVID rally. So definitely an important level to watch for the next few weeks, I would guess. But then you might have to adjust those strike prices to like 430 or so if that does end up going against you. But yeah, we just been in a pretty wide range, like that 380 Fibonacci level below and that 418 level. Went outside of it for a little bit in August, but for the most part, staying within that for the past year. I'm going to make the line for 179 so I can see when I get in the money, out of the money with this debit spread or the credit spread that I opened. Left extension on at 179. And I'll make that solid line to differentiate. Get an alert whenever it goes below. Area ideas where we think will be by the end of the week. The end of this week, let's see, for SPY, it's at 411 right now. I think it's going to be a short week. So we're going to say that it'll have a smaller range. My guess would probably be, depending on how the data comes out, let's see. We have JOLTS job openings tomorrow. I think the labor market is still hot, so that's going to lead to more inflation fears, but I'm not sure if the markets really care too much about it. But that would lead us to like 406, my guess, by Wednesday or Thursday. But if the number of job openings is down, we may end up staying above this 410 level, and I would say that 412.35 would be in the cards for Thursday. So it depends, again, on how the data comes out. If it comes out bad, 406. If it comes out good, then 412. No premium for selling puts. Yeah, I can't imagine the premiums are too good with the VIX as low as it is at 1930 right now. been kind of thinking about a strategy for VIX or UVIXY, and whenever VIX is below like 20 or around 20, selling puts on it and collecting premium. And if I get a sign, buy 100 shares of UVIXY or VIX, and then when it pops back up, then cover calls to the upside. Because I mean, the VIX always trades range bound, right? Between like 18 and 30 as of lately. So I think just shorting those strike prices would be a pretty good idea. Not sure if you can own 100 shares of VIX though. Let me see. Aries. I know you can trade VIX calls, VIX puts, VIX options for Aries, but you can't do it for Robinhood. But let's see. If I sell, say, a $19 put, you're getting paid $20 for 1,900 collateral, 1% for a weekly expiration. And then if you want to extend that expiration out a month, like you usually would for selling puts, you get paid 47 for 1,900, or about 2.4%. It's not very much considering how close the strike price is, but again, that range of 18 to 30 is still kind of sticking around. And if you extend that expiration date another 2 weeks to May 17th, you get $64 instead of 47. So that might not be a bad trade idea too. What makes the VIX go up and down? It's just based on how many people are buying puts or calls for SPY. So if there's more put options being bought, that will send the VIX up. And if there's more call options being bought for the next 30 days, then the VIX will come down. But it's mostly just mean reverting. And the average for VIX has been, I think, about 24.50 for the past year. So that would be my expectations, just going back to 24.25. But it really depends on, the macro. If there's any other bank failures, that's what sent the VIX up recently. Or if the Fed is getting more hawkish because inflation is sticking around more, like back in September of last year when the VIX went above 30, that would cause the VIX to go up. There's multiple things that can cause it to go up. But basically, any time shit starts to hit the fan, volatility goes up, people start buying puts, which rises the VIX. All right, now everything's pulling back. IWM is back to 190, or 190, 179. SPY's back to 150, or 410.50. So hopefully we end up flushing here, especially with IWM at 179. We just crossed that 179 level. So I should be at a profit for the call credit spreads. Let's see, Robinhood. $56 profits so far. Should make back the 100 that we lost for Qs. And the Qs is pulling back to 319.50. But yeah, these are dropping like a stone now. Any 0 DTE butterflies? I think today is going to be pretty volatile either way, so I wouldn't be too certain on picking a specific price for any of the indices today. Maybe like 409 would be my guess. 408. If you do 408 and we keep falling, that would yield you a pretty good profit just because it's $2 away from the strike price you're choosing. The closer it gets to 408, the more profit that you'll get out of it. So 408 could be a decent mark. That's where we were in the pre-market and the pre-market this morning. So we could come back to retest that sometime. We might have been able to hold both the QQQ and the IWM trade and been able to make profit on both, but that's all right. I'll make it back with IWM. $96 for the profits so far. What's IWM? IWM is a Russell 2000, so it's a bunch of small caps. So anything that's less than $5 billion in market cap, and it's 2,000 of the top companies that are less than $5 billion in market cap. So it's a pretty broad ETF considering that it's 2,000 stocks deep. But it's more sensitive to the market because it is small caps and they're considered more risky. So whenever the markets start feeling more risk on, IWM will usually lead the way. And then once the markets start to get risk off, IWM will lead the way down, typically. All right, these are up 112 now. We're getting close to break even from Friday's close. Surprised SPY is still holding up as well as it is. But it's the Dow that's leading the way this morning. 0.9% still up. Usually if you see a turnaround for IWM like that, it leads the rest of the market down in a risk off kind of indicator. But SPY's not really budging yet. It is down from 411, but not nearly as big of a move as we saw for IWM. I do prefer Aries, but I'm not able to trade with them. I think the balance on this account is too low for me to trade with them. So I'd have to deposit in order to start using it. Probably because I'm under the 2,000 mark, which you need for a margin account. So I just need to deposit 1,000 and be able to trade with it. And the main reason why I prefer them is their bid-ask spreads being a lot tighter than what you'll get for Robinhood. Like this one is 28.31 for the 179, 180. Whereas if you look for Aries, the same option, it'll probably be like 2 cents wide instead of 3 cents. Yeah, 29 cents and 30 cents for the bid-ask spread versus 28 and 30 cents. Yeah, they're like brand new to the market. They've only been available since I think I started trading with them back in October or something like that. And before then, I think they'd only been out for a few months. But basically what Aries does is they are a third party like user interface. So basically they're a third party user interface to TradeStation. So they built their user interface, user UX, UI on top of TradeStation, the broker. And they're a lot cleaner, obviously. Like if you've used TradeStation, it's pretty clunky, but they're very Robinhood-esque in terms of design, so very easy to use. The only thing that I would say that I'm not a huge fan of with Aries is the way that they group their spread options. Instead of just grouping it in one trade, what you'll see is a profit and loss per leg. I started asking them to work on that, and they didn't get around to it back in October. So part of the reason why I don't like them, but other than that, like you're going to get way better prices than what you can get for Robinhood, and you don't pay any commission for it. So unless you're trading like SPX futures or the cash settled ones, then you still get charged. But that's a standard. Maybe the QQQ call wasn't a great idea. Yeah, I exited that. So, and I held the IWM put or call credit spread. So that one's up 208 now. We ended up flushing below the Friday close at 178.41. So we could probably just get out now and be at a profit. 200 profit from it so far this morning. After the 100 loss that I got for QQQ. Let's see. Tesla's down to 196. UVIXI's up a little bit. If we get a decent rise for UVIXI, I might sell some cover calls here. But I want to see like 4 or 5% before I start selling cover calls on it again. At least. KRE needs to pass 40. KRE is just kind of range bound. I would maybe even trade the range, go with it, rather than assuming it's going to crack below or go above. Because, I mean, we haven't had any more bank failures unless you're expecting another big bank failure soon. but the timing on that is obviously unknown. FRC is up 1.9% today. Let's see, WAL, Western Alliance, is down 3%. So all these regional banks are just kind of trading flat, not really moving much any direction. All right, these are going for 13 cents at this point, so basically in the bag. Kind of thinking about taking profit for it. I've got 8 of them that I opened at 44. Now they're going for 13. So 248 in profit right now. But yeah, if I check like Aries versus Robinhood, it's going to give me like a 1 cent bid ask spread versus a 2-3 cent bid ask spread for Robinhood. So if you want better prices, Aries is definitely the way to go. But I don't have enough capital in order to trade with Aries right now since it's a margin account. I could probably switch to a cash account. That could work. But yeah, bid ask spread here. Well, if I choose the right options, huh? Bid ask spread here is 9 cents. Actually, just 9. 8 and 9 cents versus Robinhood is 8 to 10. But yeah, that was a bloody sell-off for IWM right there. Very quick. SPY managed down to the red, but Dow is still up 0.7. That's rough. IWM got crushed with that. It was overbought and now it's oversold. It's very volatile for IWM. I think I'm just going to hold these to max profit here. We could manage back up to 179, but this price action is looking pretty quick to the downside. These are at 300 profit now. I might close out of them at 5. What's that? Another $40 credit that I could get out of it. Let's see if there's any news that's sitting us down like this. SPY. International Energy Agency says OPEC cut, risk exacerbating strained market, pushing oil prices up amid inflationary pressures. Global markets already set to tighten in the second half of 2023, with potential for substantial supply deficits. So that's the only news piece that's out right now. I don't have my phone to check the FinTalk News app, unfortunately. But yeah, IWM is definitely feeling the worst. And then QQQ is down 0.8%. hoping IWM can pull back to like 177. I think that would secure this trade. What are they going for? Like 6 cents a piece, 8 cents a piece? Glad that I went with that higher strike price too. Or the lower strike price. I was going to go with 180, 181. But the credit on it was like 24 cents, which I didn't think was enough. So I went with the one strike price lower at 179 and 180. Got 44 cents. SPY is just trading flat, down 0.02, 0.03%. It's below 50 on the RSI, so if momentum is sticking around, then that would continue to bleed to the downside. Again, I think 408 could be the case today. The pre-market lows from this morning. And if we look at SPX, this is at 41.36. So this would lead it down to like 41.25-ish. If you're looking at SPX instead of SPY. I think I want to get the extra $40 out of this IWM trade. Or at least write it down to like 2 or 3 cents. So it's like $20 or $30 that I'm leaving on the table instead of 40. Getting close to 177, but not there yet. Let me log the 2 trades that I made this morning. Let's see, drive. For April, I opened 2 of them, closed them both today. QQQ, call debit spread, which is a bullish strategy. Expiration was today, 4/3. So 0 DDE. Strike prices were 320, 321, 8 of them. I don't remember the price that I opened them at. Check the Discord for it. Let's see. 32 for close and 45 for open. Four three. Whoops. Dang it. IWM call credit spread, which is a bearish neutral strategy. Expiration date was today as well. Assuming it's going to be below 179. So I bought the 180, sold the 179. 8 of these for 45, I think, too. Or 44, actually. Slightly less. And that's a credit to open. All right. IWM's recovering a little bit, but SPY's dipping some more. 0.06, down 0.06 today. So I think as long as SPY stays in the negative, IWM will probably won't get back to 179. And we can just keep these open for the rest of the day, or until they get to like 2-3 cents a piece is what I want to close them at. Could just place a limit order and wait for it to get filled too. Yeah, I think that's what I'm going to do, and then I'll head out of this. 0.03, limit order. So again, leaving 24 on the table. Limit order to close. IWM, call credit spread at 3 each. Strike prices were 179, 180. And expiration date is today, expiring 4/3. These are still going for like 6 cents, so still well above what I want to close them at. But yeah, that's all I got for y'all today. Just pulled off 11% for FRC, calling it a day. That sounds good to me. Thank you for your time. Yeah, no problem. I'll be back tomorrow. Do I use supply and demand strategy? Not really. I just go based on price levels, events, and spread options. That's basically the gist of my strategy. But yeah, I'll catch y'all tomorrow at 9:30. See you, everybody.